How do you determine value when it comes to financial advice or financial planning? I mean, think about it. Let's assume you're in the market for a new phone. And when you purchase this phone, you're able to see immediately once you open the box whether it's in good working order. And naturally, if there's a crack on the screen, you're going to take this thing back for a replacement. But what happens when it comes to financial advice and financial planning? You're kind of stuck because it's almost as though you have to take the advice and at a later stage, you see whether the advice is appropriate or not appropriate. But by then it's too late. You might have lost money in tax or investing in the markets. Now, Warren Buffett has this to say. I regard him as one of the most successful investors of all times. And he says, price is what you pay, value is what you get. So if you're paying a price for financial advice, how can you determine the value that you're getting in return for it? Now, I'm Dhevan Naicker, and I specialize in creating solutions for individuals who are retiring and government employees who are looking to resign. And I want to share with you the way that I go about approaching this. Let's assume that you are about to retire and you have a pool of capital, and that is 6 million rand. Now, from this capital, you are entitled to take a third of it in cash. So you're entitled to take 1/3, and this amount is a cash amount. The balance of this money is what's going to be invested. So you have to invest this. Now, on that pool of money that's going to be invested, there's going to be a financial planning fee. And that fee is calculated as a percentage, 1.725%, and that is including VAT. So let's get a figure for, or get some idea as to what this works out to. Your 1/3 value here is 2 million rands, and the amount that's going to be invested is 4 million rand, which means the cost is 1.725% on 4 million rand. What does it work out to? Well, let's have a look at that on a calculator. We can work the figure out together. So 4 million rand times 1.725%, and that works out to 69,000, which means that's your initial cost. That's the cost for the advice itself. So we'll list that here as 69,000. Now, how do we determine value when it comes to this? I'm going to show you just one way, but there are other avenues. And I'm looking at this capital. So this 2 million rand here. What I want you to pay attention to is that 2 million rand is subject to tax. How is the tax calculated? Well, SARS uses this tax table when they're determining how much tax would be paid. And you can see it, the first 500,000 is tax-free, but notice this 2 million rand is at the highest threshold. So it's sitting at this element here where it's 130,000 plus 36% of whatever exceeds 1,050,000. So I'll do the tax calculation together with you, but you can always rewatch the video if you need to. This is, again, just giving you an idea. So it's 2 million rand. I'm first finding out how much is more than 1,050,000. And this figure, we are working the 36% tax on. So it's 342, plus we've got to add 130,500. So total tax here is 472,500. 472,500. 472,500. Now, the question is, what if I could give you advice that allows you to create a saving on that tax? So what if I could give you advice that allows you to save 472,500? What does it mean for you? It means, in essence, we'll call it an investment. You've invested in yourself by paying me 69,000. And in return, I've created a solution for you that saves you 472,500. Is that a good investment? Of course it is. And this is how we determine the value of financial planning. Now, if you're dealing with an FPI consultant who is either a certified financial planner or who's attained one of the accreditations, it puts you in that position where you're able to get this quality advice. I hope you found the video helpful.